Hi everyone, my name is Simon Mishevich, and in this video I want to talk about Americans or foreigners using a C corporation, which is a United States limited company but residing outside of the United States. There are some legal and tax concerns that we need to deep dive on, so let's go through it. Before we get started though, if you wish to have a US or UK tax calculator, well, don't worry, we've got you covered. You can use our tax calculators free using that QR code showing on your screen, or indeed the URL that is in the description box. So the question is, what is a C Corp or C Corporation? Well, the definition is a C Corporation is a legal business structure in the United States that operates as a separate entity from its owners, who are shareholders. It offers limited liability protection and has the ability to raise capital through the issuance of stock. Unlike other business structures, a C corporation is subject to double taxation compared to an LLC, for example. Once at the corporate level on its profits, and again at the individual level for those who take profits in distribution of dividends to its shareholders. And that's the real big kicker, is you may have a company, but it will only be taxed on the corporate level if you do not take any dividends out. If you do take dividends, then you have double taxation, once in the company and then at you from a shareholder level. So, C corporation, what are the benefits? Why use one at all? Well, it talks about asset protection. So if anyone sues the C corporation, it is going to be the liability will stop at the C corp alone, not you, unless of course you have decided to file something as a personal guarantee, and that's something you should be avoiding at all possible. So make sure that you read all your contracts carefully before you sign it. Second thing is tax flexibility. You can tax personally or reinvest it. What I mean by that is, if you do not need the money but you're happy to try and reinvest it in some way, then that might be possible. So my Inc., my C corporation, may well decide to invest in other LLCs which own property. So that way I can then start to invest my money from the C Corp into other types of investments. I do not need to take the money out personally myself to then invest into real estate property. And that's something you need to be careful of, because what people tend to do is they take money out of their C corporation, they get taxed at the income tax level on their own tax returns, irrespective of where they live, and then they reinvest it, which is kind of counterintuitive, isn't it? Because you kind of think, well, why not invest it from their C Corp down to an LLC and create yourself a group structure? There are complications and issues with that, but that's where you need to get some tax advice. And that leads me to that QR code. Make sure you book some time with us to talk about that. Okay, so forms for you to be aware. A C corporation isn't filed on your 1040 tax return. No. It's going to be filed on your 1120 tax return to the Internal Revenue Service. Furthermore, it's going to have to be paid and submitted by the 15th of the 4th month, year end, which basically means if you have a year end of 31st December, then it will be the same year end as the 1040, which is the 15th of April. But if your year end is June, then your year end is certainly not going to be the same date as your 1040 tax return. And finally, if you want to extend, it's not going to be a 4868, which you would use for your 1040. No. Here's yet another form, which is the 7004, which allows you to extend it for your 1120 tax return. C corporations for UK residents, and this is really interesting for UK people that own a C corporation, but it's also useful for Americans that go over to the United Kingdom and still have a C corporation. By the way, if you are moving money from one country to another, make sure you get the best exchange rates. Use that QR code and you'll find the most fantastic rates, which I personally use as well. So now let's go into this. It's going to be taxed at the company level. So if the C corporation is in the United States, which clearly it's going to be, then it's going to be taxed there. If you do not take any dividends at all, then the UK will not look at it at all. They won't tax it in any way. Now, the only time you will have UK taxation as an American living in the UK or a Brit that has a C corporation, the only time you are going to be affected on your self-assessment tax return is when you take money from that C corporation. That will be deemed as dividends, and there are different rates for UK tax rules for dividends. So make sure you get your good tax preparer, your tax advisor, to help you with that. Now, the company is going to be taxed where the activity is, and this is where you've created a permanent establishment. Okay, so this is whereby the company has its activities, its assets in that country. So if you are an American and you provide services and you're using a C corporation, but you now move to the United Kingdom, you have to be careful, because the United Kingdom, HMRC, from a corporation tax perspective, will look at this and say, well, actually your activities now, your permanent establishment is in the United Kingdom, not the United States. So we are now going to charge you corporate tax on your activities. And if you're not careful without proper tax planning, you will suffer both UK and US corporate tax liabilities. It's possible to get foreign tax credits. There is a US-UK tax treaty, but you need to be careful when moving from one country to another. That also applies, by the way, if you're moving from the UK to the US and you're using a UK limited company, but you are the main person driving all the revenue for it. Actually, the US will start to take its fair share from you as well. So be careful, careful, careful with whatever you do with this. And when you are, funny enough, if you are an American moving over to the United Kingdom, there is something called the remittance basis, which basically means is that you'll only be taxed on the money that you bring into the United Kingdom. So there is some really fantastic tax opportunities for you to take in the United States. And using the UK remittance basis, it can also benefit you from reducing your taxes in the UK as well.